In this video, we explain the cost of living, real estate prices, and foreign investment in Addis Ababa.
Imagine a city that changes so fast. If you leave for a year and come back, you might actually get lost.
Okay.
And I don't mean you forgot the street name. I mean the street itself might look fundamentally different. A skyline that just seems to rearrange itself overnight.
It's the definition of a city in flux.
We are looking at a metropolis undergoing a metamorphosis so rapid, it is almost physically hard to track.
And just to be clear, because I know where your mind goes, we aren't talking about Dubai in the 90s or Shanghai in the early 2000s. We are talking about right now, today, in 2026.
We're talking about Addis Ababa, Ethiopia.
Exactly.
And this deep dive is, well, it's for those of you who might be tired of the generic Africa rising narratives, the fluffy stuff, and you want to get into the weeds. We've pulled a pretty serious stack of data for this one. We're looking at market analysis, real estate trackers from 2022 to now, and some very granular cost of living breakdowns for 2026. This is the Gateway to Africa deep dive.
And the timing is really the crucial variable here. The data covers this wild trajectory from 2022 up to where we are now in early 2026. And the mission is to cut through the noise.
Right.
There is a lot of hype, a lot of shiny brochures with glass towers, but we need to look at the hard numbers. We need to look at the explosion in real estate prices, the actual burn rate for an expat, and whether this narrative of foreign capital flooding in is actually, backed up by reality.
Let's unpack that macro picture first, because for a lot of people, when they think of major global investment hubs, Addis might not be the first name that pops into their head.
No, it's not.
It hasn't historically been in the same conversation as, say, Johannesburg or Lagos. But according to these sources, the global investment community is paying very close attention. So why? Why is everyone watching Addis right now?
It starts with strategy. You can't separate the city's growth from the government's explicit reform agenda. For the last few years, they haven't just been sitting back. They have been, aggressive about creating what they call a competitive and predictable business environment.
Predictable is the key word there. I feel like investors can handle bad news, they can handle taxes, but they absolutely cannot handle surprises.
They despise volatility and regulation. And that's why the gateway status is being pushed so hard. Ethiopia isn't just selling itself as a destination, it's selling itself as a connector.
Okay.
They are leveraging Ethiopian Airlines, which, let's remember, is already a massive, profitable player in global aviation, to position the capital as the strategic link, the hub that everyone has to go through.
Speaking of connections, we have to talk about the mega project. This was the headline that really jumped out at me, the Bishoftu International Airport.
It is massive.
It's not just massive, it carries a $12.5 billion price tag. That is billion with a B.
Yeah.
For a developing autonomy, that is a staggering amount of capital.
It is. And the scale of ambition there is so telling. You don't spend $12.5 billion just to upgrade a terminal or add a runway.
No.
Upon completion, this is slated to be Africa's largest aviation hub. When you put that kind of money into the ground, you're signaling to the world that you expect volume, you expect trade, millions of people. It's a bet on the future of African logistics, not just Ethiopian tourism.
It really puts the Gateway nickname into perspective, doesn't it?
It does.
But let's look at the business side of things, specifically for the people listening who might be thinking about where to deploy capital. The source mentions some investor-friendly reforms. Usually when I hear that phrase, I get a bit skeptical.
Sure, it sounds like marketing speak.
What does it actually mean here?
It's about attacking the friction points. Historically, if you wanted to invest in Ethiopia, the two biggest headaches were, how do I start?
Wow.
And how do I get my money out?
Right, the exit strategy.
Always. The currency controls have always been a massive sticking point. So the government has tried to address both. They've introduced fiscal incentives, tax breaks, duty-free imports, which is standard fare. But more importantly, they're offering guarantees for fund repatriation.
Which is huge. That's always the fear, right? That your money goes in, makes a profit, and then gets trapped.
Precisely. If you can't exit, you won't enter. That guarantee is designed to unlock foreign direct investment that has been sitting on the sidelines. And to handle the how do I start problem, they've created this one-stop shop service.
The famous one-stop shop. Does it actually work?
Well, the goal is to de-risk the process. Instead of bouncing between 10 different ministries, getting a stamp here, a signature there, you go to one place. It cuts the red tape. in theory.
In theory, okay.
Whether it works perfectly in practice is always the question, but the intent to remove those hurdles is clearly there.
So on paper, the environment is being primed for business, but I want to pivot to where that money is actually going. Let's talk real estate, because this is the meat of our deep dive today.
Right. The source describes the market as experiencing intense growth.
Intense is one word for it. Volatile might be another. Explosive definitely fits.
I was looking at the price appreciation numbers from 2022 to 2025, and honestly, if you bought property 3 or 4 years ago, you are probably very happy right now.
You would be ecstatic. You've likely outperformed almost any other asset class in your portfolio. I mean, including most tech stocks.
Let's break down these shocks. If we look at the city center prime real estate in 2022, you were looking at about, $1,200 to $1,500 per square meter? Fast forward to 2025, it's hitting $2,000 to $2,500.
That is a 67% to 100% increase in just 3 years. That's aggressive. It suggests a market that is heating up incredibly fast.
And it's not just the center. Look at the prime areas like Bole. Everyone who knows Addis knows Bole. It's the diplomatic hub, the entertainment district.
Right, near the current airport.
In 2022, it was $1,000 to $1,300 per square meter. Now, you are talking $1,500 to over $2,000. So you're potentially doubling your money in a 3-year window. And even outside the center, the trend holds. We saw prices in secondary zones go from the $700 range up to $1,500.
Wow, that's an even higher percentage increase.
It is.
So the obvious question is, why? Why is the graph almost vertical? Is it just speculation? Is it a bubble?
I mean, speculation plays a part, sure. Investors are chasing gains. But it's mostly basic economics, supply and demand. But the imbalance here is, it's severe. The source notes that there is a massive housing shortage. The formal supply, legitimate permitted construction, is meeting only an estimated 10% of national demand.
Wait, let's pause on that. 10%.
10%. Just let that sink in.
So for every 10 people looking for a formal home, there's only one available.
Correct. And that includes everything, from affordable housing to luxury condos.
Yeah.
When you have that kind of scarcity, prices don't just go up, they skyrocket. The seller holds all the cards. People are desperate for formal housing, and they will pay a premium for it.
That makes sense. If 90% of the demand is unmet, the price maker has all the power.
But what about now? We are in 2026. Is this rocket ship just going to keep going straight up?
The analysts are tempering their expectations a bit. They are projecting annual growth of about 7 to 10% for this year.
Which, to be fair, is still a very healthy number. If I got 7% on my house, I'd be thrilled. But it's not the doubling in 3 years Wild West scenario we just saw.
Exactly. It's stabilizing. A market can't double every 3 years forever. But here is where it gets interesting for the savvy investor. The source suggests the opportunity might be shifting.
How so?
The established prime areas like Bole, CMC, Ayat, they're getting expensive. The entry price is high. The real growth might be in the emerging corridors that are expected to outperform those zones.
So the secret is to find the next Bole.
That is always the secret in real estate, isn't it? You want to be where the infrastructure is going, not where it already is. Okay, so property is expensive. What about actually living there? Because this is where the source describes a dual narrative. And I love this part because it really shows what day-to-day life is like. It seems like a city of extremes.
It really is. It creates this fascinating paradox where the city is remarkably affordable for some things and just shockingly expensive for others. It completely depends on your lifestyle.
Right. It depends on whether you are living like a local or trying to replicate a Western lifestyle in East Africa.
Exactly.
Let's start with the good news, the affordable stuff. If you love food,
you're in the right place. Absolutely. The cost of dining and groceries is very low by international standards. You can get a meal at a decent restaurant for around $4.
$4. You can't even get a latte for $4 in London or New York.
And that's a sit-down meal. Groceries are the same way. Tomatoes are around 77 cents a kilogram. Bread is just over $1. If you are living and eating locally, your daily spend is minimal.
And transport too, right?
Extremely low. A monthly public transport pass is about $10. So the basics of survival food and movement are cheap.
But then we hit what I'm calling the digital nomad trap. Because if you are working remotely or you need modern amenities, the math just changes completely.
It flips upside down. The standout statistic here is internet cost. In a world where we expect connectivity to be cheap, Addis is a total outlier. Unlimited broadband is priced around $111 per month.
$111 a month. That is steep.
To put that in context, that is nearly 150% more expensive than a city like London. So you are paying premium luxury prices, really, for essential digital infrastructure.
That hurts. You're saving on the tomatoes, but you're burning cash on the Wi-Fi.
Yep.
And then there is rent. We talked about buying prices, but what if you're just renting?
It's a major expense, especially relative to the other costs. A standard 85 square meter apartment, a decent size, is going to run you about $366 a month. It's around $57,000 per.
Okay, $366 isn't terrible compared to, say, San Francisco, but compared to the $4 meal, it's a big jump.
But now look at the high end. If you want to be in those expensive areas we talked about, the expat bubbles with security generators, that same apartment jumps to almost $580 a month, over 90,000 birr.
So when you total it all up, what's the damage? If I'm an expat moving there in 2026, what's my burn rate?
The estimates suggest a single expat, excluding rent, is looking at about $375 a month for living costs.
For food, transport, basics.
Right. But if you are a nomad or short-term visitor who relies more on those expensive services, eats out at hotels, uses high-speed data, that jumps to around $821.
It's still very competitive globally, but you have to be aware of those specific high-cost items.
You do. You can't just assume everything is cheap. You have to budget for the connectivity and the housing.
So we have the macro picture, the real estate boom, the cost of living. Now the big question, why? Why would an investor look at this landscape with the high internet costs, the housing shortage, and say, yes, take my money?
It comes down to one word, really.
Okay.
Yield.
Ah.
We are living in a low-yield world. If you look at bonds or real estate in Europe, the returns are thin. In Addis, we are looking at gross rental yields of 10 to 12%.
I want to pause on that number. 10 to 12% is massive.
It's huge.
Most investors in Europe or the U.S. are fighting for 5 or 6%.
Exactly. In mature markets, a 5% yield is a win. Here, you are doubling that. And that's the trade-off.
Yeah.
You accept the friction, you accept the high internet costs, the bureaucracy, and in return, you get double-digit yields. That is the risk premium.
Plus, presumably you have the long-term view. The urbanization trend isn't stopping. The airport isn't going anywhere.
That's the thesis. You are betting on the trajectory. You're betting that the reforms will work, the airport will bring in business, and that demand will stay high.
But, and there is always a but, we have to talk about the risks. It's not just free money lying on the street. The source highlights some critical considerations.
And they could wipe out that yield if you aren't careful. The biggest one for me is the affordability gap.
Right.
We talked about how expensive these apartments are, $2,500 per square meter, but we also talked about the local cost of living being very low. That implies local wages are low. The price-to-income ratios in Addis are among the highest in Africa.
Which means the average person living in Addis cannot afford to buy these apartments.
Correct. So the market is heavily reliant on a specific slice of the population expats, the diaspora, the wealthy elite. And that creates a risk of oversupply in the high-end segment. Everyone is building luxury condos because that's where the margin is.
But the real shortage is in affordable housing.
Exactly. So you could end up with a glut of luxury apartments sitting empty while millions of people are looking for a place to live. It's a classic real estate trap. You build for the 1%, but the 1% is a small market.
And then there are the operational hurdles. We mentioned the internet, but the source also notes that speeds can be slow despite the price. You have bureaucratic inefficiencies. And just visually, the reality of luxury builds right next to informal settlements.
It's a complex environment to navigate.
The source had a golden rule for investors. I think we need to tattoo this on the forehead of anyone thinking about buying in this market.
Due diligence. It sounds boring, but in this market, it is everything. Specifically, the legal verification of property title.
Do not hand over the cash until you are 100% sure about that title.
Non-negotiable. There have been issues with title clarity, overlapping claims, even fraud. The source explicitly mentions using established platforms and the official Ethiopian Investment Commission. Do not try to cowboy this.
You need local expertise.
Yes, you need to verify that what you are buying is actually yours to buy.
It sounds like the one-stop shop the government set up is probably a good first stop for that kind of guidance.
Absolutely. Use the formal channels. If a deal looks too good to be true and it's being done on a handshake, run.
Okay, so let's bring this all together. We are looking at Addis Ababa in 2026. We have a $12.5 billion airport rising up, real estate prices that have doubled, and a cost of living that is both incredibly cheap and surprisingly expensive. How do we synthesize this?
I think the phrase pivotal juncture is the best way to describe it. The city is transforming. The infrastructure projects are real, tangible game changers. The reform agenda is robust. But success isn't automatic.
It's not a guaranteed winning lottery ticket.
No, it requires a long-term perspective. You have to be willing to navigate the complexities, the title deeds, the infrastructure gaps, the internet costs. But if you can navigate those, you are positioning yourself in what could be one of Africa's next great urban success stories.
It's high risk, high reward, but with a lot of structural support being built underneath it.
Exactly. The foundation is being poured. The question is what gets built on top of it.
You know, it leaves me with a thought. We talked about this city of extremes. You have a place where unlimited internet costs more than it does in London, but a full meal costs $4. You have a market where formal housing meets only 10% of the demand, yet developers are rushing to build high-end luxury units.
It's a tension, isn't it?
It is. And it makes you wonder about the nature of these emerging markets. Are we looking at a sustainable economic boom that eventually lifts everyone up? Or is this affordability gap? We talked about a bubble waiting to burst for the high-end investor.
Yeah.
If the locals can't afford the rent, who is going to live in all those new towers in 10 years?
That is the multi-billion-dollar question.
Something to think about. That's it for this deep dive into the 2026 landscape of Addis Ababa. Thanks for listening, and we'll catch you on the next one.